Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking in on the market. First things first, if there's one point that I want to drive home in this video, it's that in my opinion, this market is not going to consolidate until oil consolidates. We've seen 8 green days in a row on oil. They are extremely correlated. Oil continues to hold up with very brief, very healthy consolidation, and SPY is seeing the same thing. We are now seeing that every lower open is getting bought up. The initial consolidation that we saw, we had a lower open, the bulls bought it. We had a weak close, and that did not last long at all. We have a lower open, and the bulls buy it. So we have the highest close at this point. We're closing right at the top of this move so far, and we can absolutely see further continuation as long as oil stays healthy. So heading into this morning, I was looking, again, for bearish downside action, which we got first thing, but we were skeptical because of a couple of reasons. Number one, what I want to see when I'm looking in bullish or bearish direction is all systems go in that direction, meaning the major sectors, the financial and the tech sector, going in that direction. And now with the oil correlation picking up significantly with the market over the last, couple months, that is what I want to see as well. All of those things going in the same direction. Then we know it's a clear, confident day. Those are the kind of days where we see 1 to 3% moves in this market, whether it's bull or bear. So when we headed into this morning, I was saying I need to see QQQ break the low yesterday. I need to see the financial sector break the low yesterday. I need to see oil start consolidating. So first things first, we saw that QQQ broke bearish. It broke the low of yesterday because it started weak and it pushed down below it. So check mark. That's good. First things first, weakness in QQQ. Now let's see what the financial sector did. And it held the low of yesterday really early on. That was my first red flag as a bear. The 5-minute time frame at 9:50 a.m. at 9:45 double bottomed by 1 penny with the low of yesterday, and then saw a significant recovery and a 5-minute trend change. That's a big glaring red flag for me because I know if the financial sector is not going to break the low of yesterday, the overall market is not going to see a significant bearish day. We're not going to get much more downside. Even if the tech sector were to remain weak, if the financial sector is not going to go with it, it's going to be a muted bearish reaction. In combination with that, we look over at oil. This was the setup of oil heading into the morning. This was our base of consolidation, very healthy consolidation. The bulls tried to see a bull move up, and then we pulled back. So I said, if we get a break of 51.42, that's a good sign for the market bears. That shows a break of support and further consolidation. We got that break, but if you zoom in, we broke it by 8 cents and instantly recovered and then broke the lower highs. So again, another instance, and this was happening right at the same time. This same candlestick is the candlestick that XLF held its low of yesterday, and then it changed its 5-minute trend. So oil was doing this at the same time. That's glaring red flag for the bears number 2. That's showing oil breaking support, not getting any follow through, and the bulls buying that dip. So the financial sector did not break bearish. Oil did not break bearish. Well, it did break bearish, but it didn't get any follow through. And so those two things alone had me put on the brakes as a bear and focus on other things. I was trading Canadian MJ today as a short-term trader. Here's again the correlation with oil. You can hardly even see that I'm overlapping 2 tickers here. That's oil with the real candlesticks and the S&P 500 SPY in the background here. And the reason you cannot see these candlesticks is because of how massively correlated they continue to be. Day after day, if you just look at the correlation between SPY and oil, we can see that they are very clearly, this was yesterday, they're doing the same thing. So oil has not consolidated. The 4-hour time frame saw very healthy consolidation overnight. We got continuation breaking resistance. We didn't see a whole lot of follow through breaking that resistance, but it's clear that the bulls are maintaining control. Again, here's our 8th green day in a row, and we closed strong. So at this point, to see any kind of bearish action tomorrow in the market or in oil, we're going to have to see a bear break of 51.34. If that level holds, we're not going to expect to see much downside. And once we lose the 4-hour higher low pattern, we look for healthy daily consolidation in both oil and the S&P 500. And at this point, neither of those are telling us that the bulls are done with this move at this point. IWM also closed strong, little bit of a weaker open, Closing up at the high, very significant strength overall. Hourly higher low was established midday at 142.27, and we closed up at the high. Let's look at the SPY hourly support to be watching. Same thing, we formed an hourly higher low midday at 256.66. So again, tomorrow I'm going to be watching 256.66 and watching for a break of that hourly uptrend. But if that occurs and I'm not seeing it line up on all of these different little pieces of the puzzle, I'm going to be taking that with a grain of salt and either not taking that trade or exiting that trade much quicker if we don't see oil follow through and the other sectors follow through. QQQ, so we got the bearish start to the day. The bulls bought that dip. You can see the correlation here is strong with everybody with the midday higher low on the hourly of 159.61. 161.52, we did not break that high yet, the high of yesterday. So that's a key resistance level to be watching. And if the bulls can break that tomorrow, we'll look for follow through. But 161.52, key resistance for QQQ. XLF, so on the daily time frame, still a bit of a triple top on XLF. Bulls are going to have to see a clear break of 24.55 in order to see continuation. And it's all about that low of support, the double bottom, 24.20. Essentially, it's the same range the last 2 days in a row, only off by 1 penny. So obviously, if we break the 24.55 level, we're looking for continuation. And if we get a bear break at 24.20, we're looking for a healthy daily higher low. So if I'm a bear tomorrow, I need to see oil break that 4-hour support level of 51.42. I need to see XLF break 24.20. I need to see QQQ and SPY lose that hourly higher low pattern. Those are all things that have to happen. VIX on the daily time frame still weak. Closing at the low of the day, no sign of a trend change. Hourly started strong, but did not get any confirmation of a higher low and higher high. The downtrend is still intact. Last little lower high is 20.60. Still keeping an eye out for an entry for these bulls, but there is no sign of one just yet until we change that hourly trend. NatGAS had the inventory report today. We had a bull break before the inventory report and then profit taking leading up into it. So the bull break occurred, there was profit taking, and then there was a bearish reaction to the inventory report. 2962 is support. 2906 is the low at this point. Again, the daily time frame just looks more and more like a bear flag every day. Straight across, very weak bounce attempt. No follow through on the bull break. And we're going to absolutely anticipate the more likely scenario is another leg down as the bulls are still struggling. And we're going to watch for a break of 2096 to potentially confirm this daily bear flag. So that's where we stand. Again, let's drive home that point one more time. Oil is running this market, in my opinion. Oil was a massive reason for the bounce when we did bounce on the S&P 500. Oil marked the bounce back in February 2016 for the entire market. And in my opinion, it's going to mark the temporary top and daily consolidation once we get those signs. And again, I'm with someone who is learning about trading. And one of the things that they said that stuck out is, you know, the more they learn about something, if they learn one thing, they realize that that's dependent on 4 other things. And then they learn those things, and that's dependent on 16 other things. And it just shows you how interconnected everything is and how correlations play such a big part. And that's why having multiple monitors, obviously, and watching how multiple things are trading in conjunction with each other is so important to have a grasp on the broader market and what is going on. You know, some people, if I'm trading Apple and I'm only watching Apple, I'm missing out on so much information and clues that I can be getting from all these other correlations with all these other sectors and commodities like oil. So I hope you have a good day. We'll see if the bulls can keep this up. Keep an eye on those hourly uptrends and keep in mind that oil is running the show, in my opinion. Have a good day. We'll see you tomorrow.